Bloody gold down 10%, silver down 25%, ETFs collapsing. You've literally got leveraged ETFs acting like meme coins going to down 80%. It's nuts.
Matt Hogan from Bitwise. So he's basically saying crypto winter's been here and we've been in it for, up to 12 months now. So ultimately, a lot of the damage should already be done.
People that are buying most recently, at what levels are they scared and they're selling? There's more sellers coming into the market each day. It just pushes that price down further if there aren't any buyers there to sort of push it back up. If that does happen, I think that then opens up the idea of, well, Bitcoin might be heading to sub 40K. Welcome back, guys, to another episode of Tapping Into Crypto. I'm Pav, and with me, the ever so lovely Ted. It's like you're glowing this month, mate. You've had a cracker of a start to the year.
Thank you, sir. Thank you, sir. Very kind of you.
I don't know why I'm saying that. Thank you. Is that just because we're both getting haircuts and looking after ourselves?
Maybe it's the year of us.
Maybe it is. Maybe our bar is that low.
Yeah.
And speaking of bars being low, this week we're here to talk about the bear in the room. And we don't do this often, but I think it's time for a victory lap, Ted.
A victory lap? Oh, yes.
Yeah.
You want to gloat a little bit, Pav?
A little bit of gloating. So we'll get the editing team just to run it back and give a little highlight of something we said about, 13th of January, like 2-3 weeks ago. But essentially calling that things looked a little bit yucky out there, and there we have it. The market's down. Doesn't feel good to gloat about it, actually.
Yeah, look, it's not a fun one to get right, but nonetheless, things aren't great. What are the updates? I guess like Bitcoin's dropped below 80K for the first time since September.
No one would have thought of that, right? I reckon. Like going back to the start of January, everything was just on a heater.
Yeah, exactly. But like if you look back to when it was last at that point, like we saw a resurgence up until all-time highs. I don't think that's going to happen this time. Like things are looking a bit more dire. But then outside of crypto market,
I was just going to say, let's zoom out, right?
Like what happened at the end of last week?
Bloody gold down 10%, silver down 25%.
Yeah, which
ETFs collapsing.
I didn't think for assets that were as illiquid as commodities like gold and silver that was possible to drop 25% in a day. Like that's crypto. Price swings.
You've literally got leveraged ETFs acting like shit coins, like meme coins going to down 80%. It's nuts.
It is wild. It is wild.
But I was just talking to Ted, like even off the show, that some of these products at the back end of last week, they were seeing more value than the S&P indices. Like products that are worth trillions of dollars were seeing less volume than silver products, which are maybe billions, let's call it. So it just, that shift in the market, just very frothy. Crazy.
Yeah, I guess in since I've been at SwiftX and in crypto, I haven't seen commodities being so hot. I guess it's same in crypto. Like when everyone's talking about crypto and things are so frothy. In the Uber driver anecdote that we always reference.
Do they talk about silver?
Not but just like everyone's talking about like, should I buy silver? Should I get into gold? And it's like similar things happen where people just get wiped out at the top.
It's true. It is true.
But we're not here to really talk about commodities. But it's a good reference point. But what are we discussing today? Well,
I think it's a good little leeway because we're going to talk about the bear in the room, as we sort of mentioned at the start. So we're going to talk, is this a bear market? If we're in a bear market, what does it smelt like in the past? What does it look like in the past? We're going to dive into some interesting data points, which you definitely find very, very interesting, as well as dive into some key opinions that are out there at the moment. It's actually a bit of a mix, bit of a wash on like both optimistic and bearish. So some really interesting takes there as well. But I think obviously we're going to dive into as well that this ain't a crystal ball episode. Like we don't know what's going to happen, but we're just going to give our thoughts on what we're looking for next, I guess, and what it kind of looks like right now as well. So those past data points, there's some pretty compelling elements there as well. So I'm excited to dive into those.
Well, first of all, what is a bear market?
Yeah, we should start there.
Yeah, I think like a bear market differs from asset class, right?
Yep.
Typically in traditional markets like commodities and equities, a bear market is a 20% downturn in prices that's sustained for a long period of time. So like 3 months plus. Now, crypto is obviously different. A 20% downturn or, a 20% uplift in price isn't out of the ordinary in a single day, right? But in past bear markets, we've seen Bitcoin drop, as much as 80% over a 12, 13 month period. So
We have seen it drop less and less every year, but yeah, like it definitely feels it more, right?
Yeah, it's like diminishing, right?
Yeah.
But yeah, if we look back to 2018, 2019, so the blow off top we saw, and then it took about 13 months, which Bitcoin dropped 81% from the top to the bottom before it started recovering, and then we saw that massive bull market in 2021.
That was where I bought at the top of that cycle.
Absolutely.
That was my first one.
You and everyone else.
Yep.
And then, after that, we saw, a blow off top again. That took about 12 months. That was down to 73% at the most to the bottom. So I guess like that was the most recent, historical bear market. But comparing that to now, look, all-time high was in October. That's about 4 months from where we are today. So historically, like you'd think that we've still got a little bit more time left. And then we're only about 38% down from that all-time high. So if we're looking back at previous cycles, we would say the worst is yet to come, or, we've got some more pain before we see things start to recover.
Let that sink in.
Let that sink in, but in a sec, we'll discuss, why things could potentially be different. Like I know some analysts have a different point of view, and, it's always good to offer the flip side of the coin. So, but you've got some interesting insight on some of the on-chain data that we're seeing.
Yeah, so the one thing that's different about crypto, when you look at traditional stock markets, equities, whatever, it's actually very transparent. Because of blockchain movements, everything's on a public ledger. So all that essentially means is that you can get a really good lens on what's happening under the hood in the markets between different parties out there. So in this particular instance, we're talking about long-term holders of Bitcoin. So people that have purchased at relatively early parts of price upswings. Generally, these are more resilient purchases, which is also important because when price does move into their cost basis, which is what we're going to talk about, it's almost that mentality of, I'm at break even, I'm just going to sell, so I don't feel any pain of it going down further. I can't risk it going any lower. So this is also a really good one to sort of look at for short-term holders. I know, a few of our guests, they look at this one quite a bit, just giving that sort of, zoomed-in approach on, the ebb and flows that we see quarter on quarter, year on year. People that are buying most recently, at what levels are they scared and they're selling? So obviously, this is concerning because, again, we'll share it in the show notes. But in the past, when we look at the particular levels that the long-term holders hold of great interest, it's usually been around the points where we haven't seen the market come back, in a sense. Like we have seen it sort of half go down, be at a point like we're at now, 30, 40% down. But then because of their selling and just trying to potentially mitigate any further losses, it just introduces a whole nother wave of selling pressure. Because that's all the market is, right? Goes up when the sellers walk away. But if there's more sellers coming into the market each day, it just pushes that price down further if there aren't any buyers there to sort of push it back up. So from all that, what we can sort of understand is that there's two real key data points to watch here. So 72K and then a lower banding of 40K. So the idea here is if we get to about 72K, which we're not too far off now, we could start to see potentially a lot of these long-term holders start to capitulate, start to just cover their losses, not really risk it for further downside. And if that does happen, I think that then opens up the idea of, Bitcoin might be heading to sub 40K potentially, because that's where the next tranche of sellers could show up. And that might be the final point of maximum pain, which we have seen again in the past. We can look at it again in the notes, check it out yourself. It's not the exact Pico bottom, but it kind of sets a floor for sentiment and when the market's kind of done selling. So
just to clarify, is 72K the average price which short-term holders bought, and so they don't want to, if they see price drop to that, they'll flee? Is that the idea?
It's of those long-term holders, it's a significant price point. So
Right.
that's the first hurdle, if we want to call it that. So if we can sort of defend that, or we start to see price fall down from that, I think that's obviously the next one that we're interested in. But as the price moves on, like let's say we go sideways here for 2 or 3 months, these rates will go higher. So usually that 72 might turn to 76, right? So it's something just to watch quite clearly. And if you want to, again, like follow these metrics yourself, it's all free dashboards that you can view on Checked On Chain. But again, we'll include the links in the show notes. But the key takeaway here is, again, we can see something that we don't normally get to see, what's happening under the hood of the buyers and sellers in the market. Very unique to crypto. But historically, once we lose these levels, it kind of sets in that cold winter of bear markets, which we've seen time and time again. So if we did see a move to 40K as well, just to sort of reverberate what you just said before, that would put us at a drawdown of about 68% from the highs.
Okay.
which is kind of in line with that whole sort of idea that every 4 years we see Bitcoin go down,
Yep.
but it's less and less every time the volatility goes out of it.
That would make sense.
So with the loss,
it would go from 80% to 71% to 68%. You're saying
potentially
at 40k.
Yeah, at 40k, which would make sense with like you said, the last one was 81, next one was 73. Well, what if this one's that 68 percent mark? So
yep. Okay.
Bit scary. Makes you a bit nauseous to think Bitcoin could be heading to 40k in the next 12 months.
Yeah.
But like this is a reality, right? Like we've seen this sort of play out in the past, and what if it happens again?
Yeah, I just know like in the past or in previous cycles, like I'd bought what I thought was the bottom, and the Bitcoin kept dropping, and then by the time we got to the actual bottom, I just lost faith in a lot of in not in Bitcoin, but I just had a lot less confidence.
Yep.
And I also didn't have a lot of cash on the sidelines to deploy when it was bottoming out. But
then looking back on that too, like would you seeing then price recover, like let's say 2 years later plus? Did you obviously?
It still gave me a return on the points that I did buy.
Yep.
But it could have been bigger returns.
Yep.
Had I been more patient, had I looked at the data.
Yeah.
So yeah, I think that's a valuable exercise to do.
I think that's a good angle too. It's not all doom and gloom. Like, I mean, again, if we always have this really short time frame in mind with when it comes to crypto, but I mean, if you zoom out, you've got a 10-year time horizon plus. These are your opportunities where averaging in, it's probably better than when price is soaring to the upside over 100k. So
yep.
Yeah.
Yeah, absolutely. But look, let's touch on what's different this time. And we do this a little bit, so we don't want to go too deep into each of these because we have discussed a lot of these points.
Yep.
But it is important to give context around, what's happening in the market, what's happening in the world this time that's different to, say 4 years ago or looking back even further, like the 2018, 2019 bear market. So first of all, institutional adoption is real. Obviously, we have ETFs, which institutions are piling money into. Now, recently we've seen net outflows overall, which could obviously impact price negatively.
Yep.
But overall, it shows that institutional appetite for Bitcoin and other crypto assets is there. So it just sort of catapults things the opposite direction when the clouds start to clear. And interestingly, a survey from Coinbase and Glassnode that released early this week claimed that 1 in 4 institutions believe the crypto market was officially bearish. So only 25%, with the majority arguing that Bitcoin was still undervalued.
Yeah, right. Okay.
So interesting. I guess that's more of a long-term view of these institutions.
That's right. Yeah, they're not really thinking about the next 12 months.
Yeah, exactly. Yeah. But nonetheless, still positive.
Yep.
The other point is regulations coming. We've talked about that at length. But in a recent development, the CFTC and the SEC, so 2 regulatory bodies in the US, have launched a project called Project Crypto to create a single rulebook for regulating cryptocurrencies in the US. Why that's important is because there have been a lot of overlapping rules between those 2 bodies in the US.
Messy.
And it's what comes under what, whether it be the SEC or the CFTC, and who rules over what. So they're going to put their heads together and basically clarify those things, which is good news. And then, of course, we've got the Clarity Act, which is the crypto bill, which is currently sitting in...
It's being talked about quite a bit now.
Exactly, yeah. It's currently sitting in the Senate. I think they're deliberating over stablecoin yields in particular.
Right, okay.
But the thinking is that will get passed at some stage before mid-year. So that would obviously be a positive tailwind.
Mm-hmm.
And then lastly, stablecoins and tokenization adoption is huge. Obviously, stablecoins are becoming a major tool for digital payments, cross-border payments, you name it.
Yep.
So just adding to that. So what those 3 things mean is they're not going to turn around things overnight, right? The reality is the market is still bearish. But what it means is when the clouds do start to clear, it's going to sort of, significantly increase that momentum in the right direction, and allow us to propel forward to that next stage of, a potential bull market.
It will be interesting because if you live through the ETF deadlines that came up in 2024, the market started pricing them in 2023. So you do kind of wonder if the market's going to, again, it's always forward looking. So if it knows that these things are coming, again, that sets up the scene. Or again, what if we're in a bear market, but this time it's different for that exact reason. I do think that's quite interesting. Another way to look at this all is through a bit of a macro lens. I mean, 2025 did a great job of absolutely throwing curveballs, just with the fact that we moved away from a economic policy that was driven by data and was more about this whole sort of tactics on the political front globally, as well as conflicts just flaring up. So, we can't really comment on that all too much because, God, who knows when that stuff kicks off, especially looking at the landscape right now and certain presidents that just like to point and shoot. So we're not going to sort of touch too much on that. But what we do know is that, if we look at inflation metrics, there's two major things that are driving economic policy right now. It's inflation and it's employment. So we've seen inflation continue to cool. It's been on a trajectory to the downside. So unlike previous market cycle tops, where we have seen inflation usually moving to the upside, this time we're seeing something completely different, right? So we're actually seeing it go the other way. And that would be a good explainer as to why we've also seen that downward pressure on crypto probably for the last 6 months, because it has been just decelerating the amount of money just entering the market. When we look forward as well to US, again, largest consumer base in the world, their jobs market is softening a little bit. It's looking a little bit, not shaky at this stage, but it's just holding steady. So it really just feels like there is just one crack waiting to turn into a bit of a crater. And then those two elements combined, they open up the door for policy intervention, monetary easing. The usual thing everyone's used to hearing about is QE or cowbell, just basically stimulus. So there is a situation that could come in the next few months where maybe we do just see all those stars align, hit that Goldilocks zone where they have to intervene and do something. We don't know what that is. But we also have the incoming new Fed chair, which is basically coming in May, and he's going to take over from Jerome Powell as well. And he's been elected by Trump. So again, Big Kevin Walsh. What you need to know about him is that, he's got a very interesting view, very much different to Jerome Powell as to how to approach monetary policy as well. So it's going to be interesting to see how he comes in, especially when his sort of rhetoric to this point has been easing and cuts is likely is going to be his agenda, especially if things are looking a little bit dicey as well. So that's going to be really interesting. I think the next 6 months is set up to sort of understand what that looks like very clearly. And what, again, the market does, it's forward-looking. So if it's going to start to see that there will be sort of policy easing coming in the next, maybe let's call it 6 months, the market might start to price in that bullishly a little bit sooner, as well as, again, just expecting that to ease rather than get worse, which is, again, much different to the last market cycle top.
How long do you think that will take for, let's say Big Kev comes in May, starts to make some of those decisions, when do we see that eventuate into a potential economy that is a little bit more bullish?
Let's give it a quarter. I don't know is the answer, but it just comes down to number one. As much as it's around data and decisions, it's also a lot of what happens with the market, the way the market reads what's going to happen at a policy level. It comes in tone, how do they approach economic forums and symposiums. When they get up to the stage and they have something to say about topic X, Y, Z, which is influencing their decisions, how do they react to that? What do they say? Sounds very meta and niche, and how does the average person follow that? It is a little bit difficult, but that's where you kind of sort of tune up your sort of following list right now, just to, who are the commentators out there that are following these people and sort of condensing that information. But I think you'll start to see the market do it with price. The price will tell you what it's expecting. And with the advent of things like poly markets and the other prediction markets, you'll probably be able to just see what's the market sentiment towards those people and those decisions that they've got to make, probably in a very rich context. So, again, it'll be a really interesting 6 months ahead, I think.
Okay, cool. So at the top of the show, we said that we'd look to some analysts to see their opinion. So we want to give analysts on both sides of the fence, whether they're staring down the barrel of a long, cold crypto winter or bear market, and some ones that have a bit more of an optimistic point of view. So first we'll start with Matt Hogan from Bitwise. He's their chief
investment
officer. Yeah, correct. So he's got an interesting take. So to no one's surprise, he's saying that we're in the middle of a crypto winter, right? Which is a pretty brutal crypto winter. But he's actually saying that, on reflection, he wasn't saying this back in 2025, but we actually started crypto winter on January 1st, 2025. And at first I was a bit confused because I was like, well, we saw all-time highs in a lot of assets, particularly Bitcoin last year. So how could we be in a crypto winter? And he makes a point of a lot of, the blue chips, when we talk about Bitcoin, ETH and XRP, we're talking about the blue chips. we're down 10 to 20% in 2025, which is not typical for a bull market at all. But if we look at the more speculative altcoin assets, particularly the ones that are tied to ETFs like SUI, Solana, AVAX, things like that, those were down up to 75% from Jan 1st. So he's basically saying crypto winter's been here, and we've been in it for up to 12 months now. So ultimately, like he's saying, a lot of the damage should already be done, and it's going to end sooner rather than later. And I was like, interesting. I hadn't thought of it like that, because we were referring to before at the start of the show that the bear market started at the top of the bull market, right, where Bitcoin hit the Bitcoin all-time high. And since then it's been down up to 40%. It's been about 4 months, whereas he's referring to it as like, no, it started on Jan 1st and it's been going for 12 months. So what's your take on that one?
I like it. Like, it's kind of sums up the year a little bit last year, because it was just a mess. So usually when it's hard to call like that, like I compare 2025 to 2024, it was much easier in 2024 to see trends hold, to see, again, just participation in crypto, like people to be, again, driving prices higher, which is what a bull market is. 2025 was just a choppy mess. So for me, like, that whole narrative, like, it holds water, right? And I would say we saw conditions really start to... They did the exact same thing. Like, they loosened up after the tariff drama, because that just caused an absolute drain on everything. And then we saw things tighten up again from October onwards. And then we saw the crash in October as well. So it's kind of smells like a bear market vibe to it. But as much as price did accelerate, I think everyone was just expecting that prices would go higher. Maybe the additional adoption of crypto just saw us making that all-time high, which, maybe if we didn't have ETFs, we would have never made that all-time high. Yeah,
potentially.
Yeah,
I mean, like, you've got other analysts like Jace Mazzino, friend of the show. He's of the point of view that's like, no, we're looking down the barrel of a, more pain for Bitcoin, and the worst is yet to come, and nothing good's going to happen anytime soon. So you get people on both sides of the fence, but we've got one of the most reputable analysts yet to come, who's sitting right across from me.
Hello.
What's your take?
Yeah, it's kind of the opposite of where I was 2 weeks ago, like being super bearish. Like, I think we're at a really interesting juncture, and I'll explain why. I think a good way to view previous market cycle movements is understanding like the global flow of money and capital. So like, if you look back every time we've had like a crypto bull market, if you want to call it like that, we've usually seen a rally in other hard assets like commodities. So we're just seeing like the mother of all super cycles in commodities just play out right now. So for me, it's like, okay, well, where does that money go to next? It's got to find a home next, because eventually we're going to see gold, silver, all sort of top out. And you could argue it's going to stay in the equity space, which I think it will. But I think eventually like that risk appetite will flow into assets like crypto. And what's really interesting is when obviously we talk about Bitcoin, we talk about its price in US dollars, Aussie dollars, whatever. You can also compare its price in gold. And when you do that, you get it's not a chart of like, oh, when is money from gold moving into Bitcoin? That's not what it does. But what it does, it gives you an idea of what's the relative strength. At what point is gold moving in a stronger direction than Bitcoin, and vice versa. When you measure Bitcoin versus gold on a month-to-month basis, when that strength tops out, which we saw about a year and a bit ago, we tend to see that trend last for 14 months. So this has actually played out 3 times already in the past. So when we hit that 14-month mark of gold outperforming Bitcoin, we start to see relatively performance move into Bitcoin. So that doesn't mean like the bottom will be in for price, but it basically means that we might see the market stabilize and start to push away, and we start to see that strength return back into Bitcoin after 14 months. And that would basically set that up to be this month and next month. So February and March. So February will be the 14th month.
Wow.
So I think a lot can happen in a month. I think this time it might be a little bit different too. But I mean, if we just subscribe to the idea that this pattern that's played out 3 times again is going to play out again, and we subscribe to the fact that the flows will go from commodities around the world, Bitcoin, it's not unreasonable to think it catches a bid.
So hold on. At the top of the show, you were talking about potential Bitcoin to 40K. And now you're saying, Bitcoin's going to start to recover as early as next month.
That's why this is a tough one. I think no matter who you're going to speak to, everyone's going to have a varying opinion until we start to see more cards come out of the deck. And I still hold that same thing. So like, I could easily see justification that we're going lower. But at the same time, I can find enough reasons that this looks like an ideal risk versus reward for maybe the market to step in. But I still think there's more ticks on the bear side than the bull side for me.
Yeah.
But I do find it very interesting that this relative strength sort of pairing between gold and Bitcoin, it's sort of topped out at 14 months every time. So I do think maybe this time is different because, again, what we have seen gold do something it hasn't done in a long, long, long time.
Mm-hmm.
There's been a lot of strength and capital just flowing into it. And yeah, basically it's an easy one to know it's right or wrong. We'll know in the next 1 to 2 months. But it kind of has got me alert and receptive to both ideas that, hey, this is just a really important time in the market. I'm just going to be paying super attention to it.
Well, mate, it was obviously an insightful take because it ended up getting picked up by Cointelegraph.
It did.
One of the biggest global crypto publications, which you've featured a couple of times. So congrats on that.
Thank you.
So we'll make sure to chuck that link in the show notes as well.
Yep.
But I guess before we finish up, how would you play this if you're just a listener who's working a 9 to 5 and you got a bit of cash on the sidelines and you're looking to get into crypto?
Easy. Don't expect to pick a bottom.
Yeah.
That's simply it. It's just more understanding what does an investment timeline look like for you. So if you're in for something 3 months, 6 months, your approach should be completely different to 3 years, 6 years, right? So if you've got that longer term mindset, like we kind of talked about through the show as well, I think just ask yourself, is this a good idea for me to be putting something in for the long term? Because now the prices are basically, if you look back at, where the market was when it was, 70K, it's like, oh, I wish I bought at 70K. It's like, well, you got an opportunity now to put something in if you want to. I do just think it's a really bad idea to be waiting for a bottom to buy. It's more like what makes sense for you at any given time, which everyone's going to have a different answer. For me, I'll still stick by my bias. I do think lower is next on the cards. Maybe we move up to 80K this week and then continue lower. But I still think I'm sort of watching what's happening around us right now to see reasons for us to hold price around this level. Would be nice. Again, because it does look like if we look at on-chain data, if we lose this sort of mid 70 region, it could look pretty dire. So we'll see what happens. But
cool.
Yeah. How about yourself?
I'm trying to pick a bottom. Look, I'm not much of a chart guy like yourself, Pav. So I more like to, get the law of averages on my side, particularly in a bear market. So as I've talked about before, dollar cost averaging, particularly, when times like this, the market's really down from all-time highs. So whether I, start a dollar cost average strategy now, and you're getting, sort of the sub 80, and then we might go down to, as much as 40, and I'm capturing buys at those prices as well.
Would you DC into altcoins?
No, other than ETH, no.
Okay.
Not at this point. Look, I don't think it's a bad, there are some altcoins that, probably have a lot of upside potential from here and are undervalued. But at this point, I'm staying on the safer side and keeping things pretty defensive.
I think we've successfully made people confused if they're bullish or bearish.
Yeah.
No.
Bear market.
Bear market?
Yeah.
Yeah, I'll go bear market too.
Yeah, okay.
Yeah, cool. All right, guys, we'll see you next week and chat more about where we are.
See ya.